Hedge funds that bet against US technology stocks have been battered by $18 billion of losses after robust earnings fueled a sharp rebound in the sector. Crispin O'Day and James Hambry are among some of the European hedge funds bought by a 16% rally in the Nasdaq Composite this year 2023, as several stocks under fire by naysayers defy their pessimistic expectations. Microsoft and Meta were among those producing better than expected earnings this week. That is the week that began from the 24th of April till yesterday, the 28th of April, extending a rally that has been narrowly focused on a handful of giant tech companies. The latest gains left a combined market value of the five biggest technology companies $1.9 trillion higher on the year, a gain of 31%. The reversal in fortune comes after a difficult period in 2022 when rising interest rates caused a flight from high growth companies. At the same time, pressure on big tech's core markets, including IT spending and digital advertising, weighed on the sector, prompting many tech groups to make job cuts. Tesla, whose periodic surges have long been a source of pain for short sellers, hit speculators again this year as its stock surged 33%. Negative or short bets, largely by hedge funds, account for 2.1% of shares in Tesla, up from 0.87% at the start of this year 2023, according to S&P Global Market Intelligence. Shorts against Tesla accounted for 0.4 percentage points of losses at O'Day's European fund and 2.19 percentage points of losses at Hambry's Brook Absolute Return Fund in the first quarter, according to investor documents seen by the Financial Times. Hedge funds that shorted semiconductor stocks have lost $8 billion so far this year, according to OTEX, while investors who bet against technology, hardware and storage businesses lost $4.6 billion. Bets against other parts of the US technology industry amount to more than $5 billion in losses. With inflation proving stubbornly high, many managers had anticipated that a sell-off in the tech sector or tech stocks would continue this year 2023. But turmoil in the banking sector sent the 2-year treasury yield falling at its fastest pace since 1987 as investors hunted for safety and positioned for a cut in interest rates, pushing tech stocks back up. We wished we had read our last quarterly newsletter a bit more closely. Our short-term inflation expectations did continue to fall quite dramatically, which helped longer-term duration assets in the quarter, wrote Hambry, referring to assets such as tech stocks in an investor letter seen by the Financial Times. Par Technology, which provides professional services software, is among the most shorted stocks, with 21% of its shares on loan, according to the S&P Global Market Intelligence. Its share price has jumped 15% this year. Other investors are turning more bullish on the US tech sector, in a sign that sentiment towards the industry is changing. Hedge funds lost around $18 billion on Nasdaq's rebound. So see what you make of all of these, and I'll continue to update you. Thank you very much for watching this video.